Now, next is going to be extent and limitation of liability of LLP and partners, which we already know that liability of partners of the LLP is going to be limited. And here there is not going to be a mutual agency between partners and partners. However, partner will be LLP will be responsible for the acts of the partners done in the course of business of LLP. Okay, so you need to understand this concept properly. So partner as an agent, so he'll not be an agent of the other partners, but is he the agent of LLP at that point of time? Yes. Every partner of an LLP is, for the purpose of business of LLP, the agent of LLP, but not of other partners. And understand, only in relation to business, you're going to be the agent of LLP, not for any other matter. Extent of liability of LLP. LLP is not bound by anything done by a partner in dealing with a person if the partner, in fact, has no authority to act for the LLP in doing a particular act, and the person knows that he has no authority or does not know or believe him to be a partner of the LLP. See, two things they're telling. One is the partner has done something beyond his authority. And second is the third person with whom you're doing, okay, also knows that you're not allowed to do. Or maybe he thinks that you are not a partner, you're doing in your individual capacity. So here you can see that LLP will not be bound when you're doing something which is beyond your capacity. So suppose, for example, a partner is not allowed to take loan on behalf of the LLP and a partner takes the loan. And the banker is giving it after knowing that he does not have the liability or does not have that kind of capacity. Then in that case, LLP will not be liable. Who is going to be liable? The partner himself. Understanding? Or maybe the banker believes that, yeah, he's taking the loan in his individual capacity. Okay? Then in that case also we are going to consider what? That LLP will not be responsible in all these cases. So first criteria, partner is acting beyond his capacity. That is wrong. Along with that, with whom you're dealing, he's also not, like, he's aware. That means all together, they all a game plan together. So he's also aware that you're not doing it, like, to give a simple example here. If suppose you talk about a partner taking a loan from the LLP or from the bank, this partner in his individual capacity, okay, or maybe as a partner of LLP, does not have the permission of taking a loan on behalf of what? LLP. Still, he goes to the bank and he takes the loan. First condition fulfilled, he's done something beyond his capacity. Second, bank manager, if he's aware that this person has no authority of taking the loan, then in that case, how can he sanction the loan? So here, understand, both the conditions have to be fulfilled. One is acting beyond the capacity. Second, bank manager also knows that this person does not have the capacity. Then in that case, LLP will not be responsible. Okay. Second, either bank manager is feeling that he's going to give this person a loan, not as a partner of the LLP, but as what? Individual capacity. Then in all these cases, we are telling what? LLP will not be responsible. Partner himself will be responsible to repay back that loan. Clear? Then, the LLP is liable if a partner of the LLP is liable to any person as a result of wrongful act or omission on his part in the course of business of LLP or with his authority. Meaning is, now tell me, in business, is it important that every decision that you take is correct? No. Sometimes there could be wrong decisions. Sometimes there could be a possibility that unintentionally decision making has gone wrong. Or maybe you're selling products and the product happens to be defective. Now, is it that you're going to catch the partner who has sold it? Or understand this is going to be in the normal course of the business, and because of that, LLP will be responsible for this? Yes, provided the partner is acting within his capacity. So partner has done what is allowed to do, but still, even then, there has been some kind of wrongful act happened. Then in that case, LLP will be responsible. LLP will be responsible to the third party because this is something which has happened as an ordinary course of the business and within the authority of the partner. So prima facie, the point that you take home is, if he's acting beyond his capacity, beyond his power, then LLP will not be responsible. But if you're acting within the authority, then there could be a possibility of some wrong actions by you. But if it has happened in the course of business, then LLP will take the responsibility. LLP will be responsible. Then, an obligation of the LLP, whether arising in contract or otherwise, shall be solely the obligation of LLP. Why? LLP and partner are separate legal entity. They're not same. So because of that, what LLP does, LLP only responsible. So if a contract entered by LLP with Reliance, if there is a breach, Reliance will punish Reliance will file a case against whom? LLP only. So obligation of LLP will be of LLP only, not of the partners. The liabilities of LLP shall be met out of the property of LLP because it is artificial person by itself. Okay, so from whatever liability is there, they only have to bear it. So whatever assets are there with the LLP, with that asset only, liability also will be paid. Partner will not be personally liable. That is the point of it. Then, extent of liability of partners. Are partners personally liable? No. Partners are liable only to the extent of capital contributed by them. However, if partner is doing fraud, then in that case, liability of partner will not be limited. It will become what? Unlimited. The partner is not personally liable, directly or indirectly, for an obligation referred to in subsection 3 of section 27, solely by being only because of the reason of being a partner. The provision of subsection 3 of section 27, okay, of this subsection 1 of this section shall not affect the personal liability of a partner of his own wrongful act or omission. But a partner shall not be personally liable for wrongful act or omission of any other partner of the LLP. Meaning is, if during the section 3, subsection 27 is just the above, where we are telling that whatever is the obligation of the LLP is the obligation of LLP only. Partner will not be responsible. Meaning is, from the property of the LLP, you pay the liability of the LLP. Will partner be ever responsible? No. But however, if one partner is doing wrong, then in that case, will other partner be responsible? No. So liability of a partner will not be borne by other partner. That is very clear. Then partner by holding out, will not discuss this because you know it as a part of partnership, where you are not the partner of LLP, but you're representing yourself to be a partner of LLP, and some third party is extended credit to you. Then in that case, you stand in the position of partner by holding out. Meaning is, you will continue to be responsible to the other party as that of any other partner. What is amongst you will not matter. Third party will sue you because you become partner by holding out. So look at the language. Any person who by words spoken or written or by conduct, anyway, you either tell, you act, or you behave, whatever it is, represents himself or knowingly permits himself to be presented as a partner in the LLP, is liable to any person who has, on the faith of such representation, given credit to the LLP. Credit has been given some loan or credit facility. But the person representing himself or represented to be a partner does not or does know about the representation as he is the person giving the credit. Meaning is, if somebody, like for example, bank has given loan, presuming you to be the partner in the LLP, then to the bank, for the repayment of this loan, you will continue to be liable as if you are a partner. So we call you to be what? Partner by holding out. However, where any credit is received by the LLP as a result of such representation, the LLP shall, without prejudice to the liability of persons who are representing himself or represented to be the partner, be liable to the extent of credit received by it for any financial institution or financial benefit derived by it. That means LLP will continue to be liable to this third party. Okay? And the LLP cannot say, okay, look, you have given on the representation of that partner, so that partner will be liable. No. LLP will continue to be liable for the benefits that they have derived from the third party. Be a representation or be no representation. LLP has the obligation to repay back. Okay, then. Where after the partner's death, the business is continued in the same name of LLP. The continued use of the name of the deceased partner, okay, as a part of the partner firm's name, shall not by itself make the legal representative or his estate be liable to the act done after the death. Meaning is what? Very simple. See, we are telling that if you're ceasing to be a partner, you have to give information to the others. And if the others still don't have the information and they trade with you, then you'll be partner by holding out. This concept is not in the case of death. For example, ABC LLP, where partners are A, B, and C. C is dead. But in that case, AB have continued to be using the same name, ABC LLP. Meaning is, will C continue to be liable because his name has been used and is becoming partner by estoppel? No. In case of death, situation is different. If it is death, it is understood, people are informed about it. And because of that, even if the name is used in the name of the partnership, even same name is still continued, then this legal representative of the deceased or the property of the deceased will never be liable for any acts of the LLP after his death. So whatever is the liability will be only up to the date of the death. Even if same name is used, does not mean he's going to be partner by holding out and he will continue to be liable. No. Whatever it is, only up to the death. Nothing more than that. Okay? That is the understanding. Unlimited liability in case of fraud, I told you, liability of partner will be limited only in the ordinary course of business. However, if it is fraud, then in that case, he will become what? Personal property is also getting attached. LLP will not be responsible. But one partner cannot blame the other partner. Every partner's liability will not become unlimited. Mutual agency among the partners is not there. In case of fraud, in the event of an act carried out by the LLP or any of its partners with the intent to defraud the creditors of the LLP or any other person or for any fraudulent purpose, the liability of LLP and the partners who acted with the intention to defraud the creditors or for any fraudulent purpose shall be unlimited for all or any of the debts or other liabilities of the LLP. In simple language, what you take home is anything done with the intention of defrauding anybody associated with the LLP, be creditors or be anybody else, then in that case, LLP will not be responsible, partners will become personally liable. Okay, that is unlimited liability. However, in case of any such act is carried out by a partner, the LLP is liable to the same extent as that of a partner, unless it is established by the LLP that such act was done without the knowledge or the authority of LLP. So you have to prove in the court of law that LLP was not aware of it. Then LLP will be set free and partner only will become responsible. Now, penalties are there. I think second point you can read by yourself. Come to third one. Where LLP or any partner or designated partner or employee of such LLP has conducted the affairs of the LLP in a fraudulent manner, then without prejudice to any criminal proceeding which may arise under law for time being in force, the LLP and the such partner or designated partner or employee shall be liable to pay compensation to any person who has suffered any loss or damage by the reason of such conduct. However, such LLP shall not be liable if any such partner or designated partner or employee has acted fraudulent without the knowledge of LLP. See, very simple point they're telling. Either LLP or designated partners or partners or the employee. Any of them, if they have intentionally done something wrong, because of which somebody has suffered, be customer, be a creditor, anybody has suffered because of a wrongful act, then forget about all the criminal laws. Under them, you'll be punished. That is a different story. Under LLP Act, do you have a punishment? Yes. Through the LLP Act, the requirement is you have to pay compensation to them for the loss that they have incurred. However, your LLP sometimes could be exempted when you prove in the court of law that all the actions were done without the knowledge of LLP. If that is the criteria, then in that case, LLP will be left and all three will be responsible. Otherwise, who has done it will have to suffer only. Basically, employee, but designated partner, LLP, any fraud committed, anybody who suffered, you have to pay compensation. When it is given, LLP Act. Other criminal proceedings going on against you, that is secondary, that will go on. Under LLP Act, you have to pay compensation. However, sometimes LLP will not be responsible. LLP proves in the court that, look, we were not knowing about it, it was done without our knowledge. Many a times they'll try such kind of suits in the court because LLP means every partner's contribution will come to a stake here. So because of that, they will try to make it a point that that particular person has done it, not me. So if it is proved in the court, LLP was not knowing about it, then that partner, designated partner or employee alone will be held responsible. Others will be set free. Clear? So that is the understanding. Then comes to the concept of whistleblowing. Whistleblowing is where somebody has given a tip to the outsider or the investigating agencies about some fraud happening. Through the LLP Act, whistleblowers are getting a protection. That means that because of whistleblowers, any information has been given which is very useful for investigation or to initiate investigation, then LLP Act is protecting them for having any kind of demotion. That is, if you're demoted in the organization, or maybe any harassment against you, or removal of yours, suspension of yours, all that cannot be done. The Act is protecting it. Okay. The court or tribunal may reduce or waive any penalty leviable against any partner or employee of the LLP if it is satisfied that such partner or employee of a LLP has provided useful information during investigation of LLP, or when any information given by any partner or employee leads to LLP or any partner or employee of such LLP being convicted under this Act. Meaning is there's a proceeding going on, and one of the partner or one of the employee of the LLP has given the information. He's acted as whistleblower, correct? So in that case, don't you think now tribunal will try to waive off? See, the language uses what? Information de do, we will help you with reducing your punishment. That is the way in which you see in movies also. They'll be showing, like if you CBI ka saath de do, then we'll try to minimize your punishment or we'll try to bring it down. Here also they're telling, if you have had the court or tribunal somewhere to either initiate the proceedings or to understand about the matters connected to the proceeding, or because of you, the proper employee got caught and he got convicted, jailed, then you became a whistleblower here because you gave information. So in that case, what is the Act telling? If it is like that, then they will allow you to waive the punishment and everything will be done. Also, they'll protect you from any demotion, suspension, harassment, anything. Okay. So the court or tribunal may either reduce or waive off your penalty if you have provided useful information. And also, okay. So further, they are saying no partner or employee of any LLP may be discharged, demoted. Discharge is removed. Demoted is from you in organization always get promoted. They're trying to bring you down only because you have informed the investigation. Okay, then suspended, threatened, harassed, or in any manner discriminated against the terms and condition of his LLP or employment merely because of his providing information or causing information to be provided pursuant to subsection 1. That means not only they're giving you that they will allow you to waive the punishment or completely, reduce your punishment and all that. Also, they'll protect you from all of these things. That means nobody will be allowed to be removed and all that. And the provisions are given where? In the LLP Act itself. So that is regarding whistleblower. Whistleblower basically is to give an information which will be known to them, okay, which will be helping them to, initiate the investigations or proceedings further. And this information becomes a very crucial role in catching the right person also. So in that case, if suppose you are a part of it, they can reduce and waive off your punishment. And also, once you get back to the organization, does not mean they're going to demote you, suspend you and all that. LLP Act is giving you protection against it. So somewhere or the other, it is like a, encouragement given that, yes, you inform it to the outsider, to the investigation team. Okay, then. Next comes to contribution. Contribution simply means capital. Okay, so in LLP, we don't call it to be capital, we call it to be contribution. So contribution you can give in the form of cash, you can give in the form of properties. Okay, so that is considered to be your contribution. A contribution of a partner may consist of tangible, movable, or immovable, or intangible property, or other benefit to the LLP, including money, promissory notes, or agreements to contribute cash or property, and contracts for service performed or to be performed. So you can see the variety of way through which contribution can be given. Okay, it could be current as well as future. The monetary value of contribution of each partner shall be accounted for and disclosed in the accounts of LLP in the manner as may be prescribed. So you have to understand in financial statement, monetary value only has to be written. So whatever capital contribution is bought, you have to convert into money, and that is what is reflected as a part of your LLP document, LLP financials. Okay, then obligation to contribute. The obligation of a partner to contribute money or other property or other benefit or to perform services for an LLP shall be as per the LLP agreement. So I told you, when a partner is admitting, he will admit as per the LLP agreement. So in the agreement itself, very clearly they'll tell you what type of capital you have to bring. Sometimes they don't bring capital in cash or capital in property. They give in the form of kind. They provide a service to the LLP. So they'll promise to provide such kind of services. That becomes a capital according to them. A creditor of a LLP which extends credit or otherwise acts in the reliance of an obligation described in that agreement without notice of any compromise between the partners may enforce the original obligation against such partner. Meaning is, here they're telling, if suppose on certain terms and conditions creditors are entered into contract with you, okay, then whatever is happening mutually among you as a partner will not be responsible. Creditor will sue you as per the original terms and conditions. Okay, that means you will continue to be the person. The meaning is, see, the creditor of LLP which extends credit or otherwise acts in the reliance on an obligation described in that agreement. Meaning is, already with the creditor you have agreement, and now maybe you have contributed that particular asset to the LLP as a what to say, contribution. Okay, then in that case what they're saying is, what is amongst your partner doesn't matter. The creditor can sue the partner based on the original contract that they have. If I have purchased a property on installment basis somewhere, okay, or maybe on installment basis, and this property is given as a contribution to whom? LLP. Okay, so to LLP I gave as a contribution, so it became what? LLP property. Now it's gone to the LLP, it went to the source of LLP. Now I defaulted in the repayment of this amount to whom? The creditor. Now this creditor, will he sue the LLP? No. What happened between me and LLP? They're not responsible. Or between me and the other partner, not responsible. They will sue me only for the non-payment of the installments based on the original contract entered with him. That is the understanding. So based on which they extended credit. Now they will enforce the original obligation against such partner. So basically, if I don't pay the amount, then they'll sue me only and not the LLP. Okay, that is the understanding. Because we can give one properties to LLP as contribution, right? Okay, so you'll have an original purchase property, you're purchasing the property, so original agreement will be there. So based on those terms, they will sue us. Now, financial disclosure, very important for exam, you can mark it. Two important things here to understand. What is the meaning of proper books of accounts? And one statement to be filed with the ROC. Very, very important. Also, in the case of companies, we have annual return to be filed. Same thing here, annual return in the case of LLP also. Okay, now, proper books of accounts, you have to remember the concept of section 128 of the Companies Act. Proper books of accounts are where you follow an accrual basis and double entry system of bookkeeping. Here understand, cash basis is also allowed. That is very interesting concept. Proper books of accounts, the LLP shall maintain such proper books of accounts as may be prescribed relating to its affairs for each year, that is balance sheet, either on its cash basis or accrual basis, and according to double entry system of bookkeeping. Single entry not allowed, double entry compulsory, but cash or accrual both is allowed. And shall maintain VAT at a registered office for such period as may be prescribed. So in company that we study for 8 years and all, here the period is not given to us. You have to remember registered office, cash or accrual both allowed, but double entry system of bookkeeping. And all the state of affairs, be balance sheet, P&L, everything, you have to maintain it based on that. Statement of account and solvency, market important for exam. Okay. Every LLP shall, within a period of 6 months from the end of each financial year, that is on or before 30th of September, prepare statement of account and solvency for the said financial year as at the last date of the said financial year. That means 31st March 2023. Up to that date, statement of account and solvency has to be prepared. 1st April 23 to 31st March 24. And this you have to file it as on or before 30th of September 24. So for this particular period, within 6 months of the end of the period, you have to file it. Okay? In such form and manner, and such statement shall be signed by designated partner of the LLP. Legal compliance signing will happen by whom? Designated partner. Statement of account and solvency. That means we are going to continue in the near future, the foreseeable future. Okay, then. Every LLP shall, within prescribed time, okay, the statement of account and solvency prepared pursuant to subsection 2, with whom registrar every year in such form and manner and accompanied by such fees. That means prepare statement of account and solvency, give all the details, and submit it to whom? ROC. Timeline is within 6 months from the close of financial year. Okay, every year it has to be done. The accounts of LLP shall be audited in accordance with the rules as may be prescribed. However, if the central government may by notification exempt, in official gazette exempt any class or class of LLP from the requirement of the subsection. In audit, we do audit of LLP. There we know that they have given a proper criteria when LLP audit becomes mandatory. And if you're falling below that limit, then in that case, it is not mandatory. So central government has the power to make rules. So as per the LLP rules, okay, there are certain who have made mandatory audit, some voluntarily audit. In India, we see LLPs go for audit. They do it as a mandatory requirement only. Benefits behind audit are many. Penalty for non-compliance of this provision will be as 100 per day, maximum 1 lakh. Every designated partner 100 per day, subject to maximum 50,000. Penalty for non-compliance of section 1, 2, and 4, not for LLP separate, for designated partner separate. Okay, that is filing with ROC 6 months and everything. Accounting and auditing standards. Accounting standards they are going to follow which, as per given section 133 of the Companies Act, auditing standards which are issued by ICAI until new standards come into picture. Central government may, in consultation with NFRA, constituted under section 132 of the Companies Act 2013, prescribed standards on accounting and prescribed standards on auditing as recommended by ICAI. So as of now, you know, AS are applicable, NDS are coming into picture, and auditing standards we have SCAs only. So until new standards come, which are going to come in the near future, they say, until then, these standards only will be applicable. Annual return, very important for MCQ question. Every LLP also should prepare annual return. Again, signed by whom? Designated partner. Every LLP shall file annual return duly authenticated with whom? Registrar within 60 days of close of financial year in such form and manner and accompanied by such fees as may be prescribed. Remember Companies Act section 92. Annual return has to be filed with whom? Registrar within 60 days of conclusion of the AGM. Your AGM concept is not there. So closure of the year, 60 days, annual return has to be filed. Signed by whom? Designated partners. Penalty, LLP 100 per day, maximum 1 lakh. Then every designated partner 100 per day, maximum 50,000. Inspection of documents kept by whom? Registrar. The incorporation document, name of the partners and changes, if any, made therein, statement of account and solvency, and the annual return filed by the LLP. You understand from the beginning we are studying. Incorporation document you are filing with whom? LLP. Any changes that happen in LLP, you inform whom? ROC. Sorry. Incorporation document you're filing with whom? ROC. Any changes you're informing whom? ROC. Correct? Statement of account and solvency you're filing with whom? ROC. More importantly, annual return you're filing with whom? ROC. When they are with ROC, are they allowed for inspection? Yes. Then, file with registrar shall be available for inspection by any person in such manner on the payment of such fees as may be prescribed. Why? Public document, no? Registrar it is. So everything you file with ROC is available for inspection. Penalty for false statement. If in any return, the annual return basically, statement of account and solvency, or other document required to be filed for any purpose of the provisions of this act, any person makes a statement, for example, incorporation document, wrong thing you approved, okay, or name address change is given, wrong thing informing to ROC, okay, anything, which is false in any material particular, and knowing it to be false, or which omits any material fact. I have told you always, giving wrong information is wrong only. Hiding correct information is also wrong. Both are wrong. Omission of material information is also wrong. Giving wrong information is also going to be considered to be wrong. He shall save otherwise expressly provided in the act, be punishable with an imprisonment for a term which may extend to 2 years, and also be liable to a fine which may extend to 5 lakh, but shall not be less than 1 lakh rupees. So minimum 1 lakh, maximum 5 lakh, imprisonment up to 2 years. This also you can mark it important. Either it is materially wrong or you have omitted a material information. In both the cases, punishment is given to. Okay, then. Next, power of registrar to obtain information. Obviously, if registrar wants any information of the LLP, can he ask the LLP? Yes. Can investigation be conducted? Yes. So whenever they ask for any books, documents, papers, invoices, anything of the LLP, can they ask? Yes. If they want to summon any person, any partner, any employee of the LLP, can they do? Yes. Can they examine them on oath? Yes. Can they ask for some more information from them, additional information? Yes. An LLP, every partner, employee, sometimes even former partners who are the partners for the time of period of investigation going on, they also will be called by the registrar for investigation. So is it allowed? Yes. In order to obtain such information, a registrar may consider necessary for the purpose of carrying out the provisions of this act. The registrar may require any person, including any present or former partner or designated partner or employee of the LLP, to answer any question or make any declaration or supply any details or particulars in writing to him within a reasonable period. So they can catch anybody from the LLP for getting information. In case any person referred above, that is partner, former partner, designated partner, or employee, does not answer such question or make declaration or supply such details or particulars as asked by the registrar within a reasonable time or time given by the registrar, or when registrar is not satisfied with the reply or declaration or details or the particulars provided by such person, the registrar shall have the power to summon that person to appear before him or an inspector or any of the public officer whom the registrar may designate to answer any such question or make such declaration or supply such details as the case may be. Better is what they're asking you, give information. If you don't give the information within the given time or within the reasonable time, then in that case, what they'll do, they'll summon you. Summon means now physically you be present. So either registrar himself will summon you or inspectors, police officers, they will be called for this and they will summon. The summon means what? You should be physically present. They'll examine you on oath. And whatever information you have not given in writing to them, your mistake. Now they will call you, you be present and they'll question you, you have to give answers. Clear? Okay. Then any person who, without lawful excuse, fails to comply with any summons means you have to physically be present, or requisition of the registrar, under this section shall be punishable with a fine which shall not be less than 2,000 rupees, or it will extend to 25,000 rupees. Simple is, registrar is asking information, give it to him within a reasonable time. If not, he has the right to summon you. Once they issue summons, either he can inspect you or any officer appointed by him or the public officer. And if you contravene any of these provisions, punishment will be given to you. Very simple provision it is. Okay, then. Compounding of offenses. Compounding means, there are some offenses which are non-compoundable. Non-compoundable means if it is imprisonment, imprisonment only. If it is fine, fine only. Compounding means what? If it is imprisonment also, excessive fine can be given and imprisonment can be, surrendered. Like means it could be reduced. That is called compounding. Okay. So compounding offenses are there in LLP? Yes. So where imprisonment is there, more compensation can be given and compounding of offenses can be done. Notwithstanding anything contained in the Code of Criminal Procedure, because Code of Criminal Procedure is final. So under that procedure, if you're asked to be imprisoned, you have to imprison only. So nothing of this act will prevail if Code of Criminal Procedure is telling something, because ultimately that is the criminal law. The regional director or any officer not below the rank of regional director authorized by the central government may compound any offense under this act, which is punishable with fine only, by collecting from person reasonably suspected of having committed the offense a sum which may extend to the amount of maximum fine provided for the offense, but shall not be lower than the minimum amount of fine provided under the offense. They have a right to collect lesser amount, but not lesser than minimum fine. Nothing contained in subsection 1 shall apply to any offense committed by LLP or its partners or designated partners within a period of 3 years from the date on which similar offense committed by it or him was compounded under this section. That means you have done one act, it was compounded. You have done the again act, the same act you have done again. How much time? 3 years. Now will they allow you for compounding? No. Nothing contained in section shall apply to an offense committed by the LLP or the partner. Okay, if that has happened again the repeated period of 3 years time, then in that case compounding will not be allowed. The section will not apply. For removal of doubt, if it is hereby clarified that any second or subsequent offense committed after the expiry of the period of 3 years from the date on which the offense was previously compounded shall be deemed to be the first offense. That means after 3 years, it is as if going to be you never did anything earlier. So are you allowed to compound again? Yes. But if it is happening in 3 years period, compounding allowed? No. Every application for compounding of an offense shall be made to registrar, who shall forward the same together with his comments thereon to whom regional director or any officer not below the rank of regional director authorized by central government. So you understand the entire compounding actually is done by whom? Regional director only. But company, the LLP directly will not contact the regional director. So LLP has to inform whom, or the partner has to inform whom? ROC. ROC will tell it to whom? Regional director, by giving his comments also. Because ROC will be knowing very well about the LLP. So their comments also they put. Or it could be any other officer, but not below the rank of a regional director. And regional director will be appointed by whom? Central government. Okay. Then, where any offence is compounded under the section, whether before or after the institution of any prosecution, intimation thereof shall be given to the registrar within a period of 7 days from the date on which the offence is so compounded. So you have to intimate registrar within 7 days. Where any offence is compounded before institution of any prosecution, no prosecution shall be initiated in relation to such offence. See, once it is compounded, then again proceedings will not happen. That is considered to be the final decision. Where the compounding of any offence is made after the institution of any prosecution, such compounding shall be brought by the registrar in writing to the notice of the court in which prosecution is pending. And on such notice of compounding of offence being given, the offender in relation to which the offence is compoundable shall be discharged. See, logic is either you have instituted the proceeding or you have not instituted. If it is instituted already, that is court case is going on, then in that case, if compounding of offence permission you have got, then in that case, the court case will stop. You will get discharged from the court case and you have to pay what fine is being compounded for you. However, if the proceeding is not instituted only, court case is still not started, before that only compounding happened, then will you again start the court case? No, that is final. So ultimately what they're trying to tell you, compounding once it is done, that is going to be the final. If the prosecution is initiated, stop it. Not initiated, don't do it. The regional director or any officer not below the rank of regional director, authorized by whom? Central government, while dealing with the proposal for compounding of any offence, may by an order direct any partner, designated partner, or other employee of LLP to file or register, or on the payment of fee or additional fee as required to be paid under this act, such return, account, or other document within such time as may be specified. The regional director is going to decide for compounding, no? So don't you think he'll require for information explanation? Yes. So whatever he asks for, is it a duty of the partner, designated partner, or employee to fulfill it? The answer is yes to that. Then, last one, notwithstanding anything contained in this section, if any partner or designated partner or other employee of the LLP who fails to comply with any order made by the regional director or any other officer not below the rank of regional director appointed by whom? Central government, under subsection 7, the maximum amount of fine for the offence, which was under consideration by regional director or of such authorized officer for compounding under this section, shall be twice the amount paid in the corresponding section in which punishment for such offence is provided. Okay, then in that case, you have to understand, if any partner does not comply with all this requirement, then he has to pay twice the amount, which is maximum punishment. Okay, that is the interesting part here. Shall be twice the amount provided in the corresponding section. Corresponding means in that section in which punishment for offence is so provided. So if the maximum punishment was 50,000, you have to pay 1 lakh now, not 50,000. Okay, that is the understanding. If you fail to comply with the order of regional director, that means they ask for returns, documents, statements, and you have not done, then what do they do? Pay double of what was maximum there. Okay, then that is the problem. So in compounding, very simple. You have to remember who is allowed to do compounding: regional director or person not lower than regional director, appointed by whom? Central government. Code of criminal procedure will prevail. If they are telling something, that only will prevail. Then once it is compounded, that same offense you cannot do for how many years? 3 years. After that, if you do, it's allowed. Again, compounding is possible. What compounding is done, that is final. So either institute the proceedings or don't institute. Ultimately, that amount will remain the final. During a compounding process, when the hearing is going on, regional director or the officer of that rank will be asking you any information that you have to submit. If you don't, then they have the power to call such amount from you, which could be twice the amount of the maximum punishment. Okay, then. Now this assignment and transfer will take it later. Just come to the last part, which is very simple. Winding up and dissolution. In LLP, we have two types: voluntary winding up and involuntary. Involuntary means what? Compulsory. Order of court. Voluntary, obviously partners will agree and they will go for voluntary winding up. There has to be an agreement between the partners. Or if there is no agreement, partners will come together, make a mutual discussion. Involuntary is where tribunal is passing the order. That time it is going to be when you are not able to continue with lawful means, or maybe the business that you're doing is become now. No, illegal will be compulsory only, so it will go under voluntary. It could be where the number of partners have fallen below 2 and you don't have the next person. Or maybe you're not able to repay your debts on due period. So, something like that, which is, or where a partner only believes, okay, we'll go for compulsory because they believe there could be a dispute among themselves. Then also they could go for compulsory. They'll apply to tribunal. Voluntary winding up. Voluntary winding up happens when partner decides among themselves to discontinue and close the LLP. So either agreement is there or they decide together. Involuntary is by tribunal. Mark it important for exam. Tribunal may wound up the LLP. LLP may be wound up by tribunal. If the LLP decides that LLP be wound up, that is LLP, that partners are coming together and deciding, okay, we are going to wind up by order of tribunal. If for a period of more than 6 months, the number of partners of LLP is reduced to less than 2. If LLP is unable to pay off its debts, if LLP has acted against the interest of the sovereignty and integrity of India, the security of the state or public, doing something which is unlawful, which is something which is opposed to the public policy, wrong activities. If the LLP has made a default in filing with the registrar, statement of account and solvency, or annual return for any 5 consecutive financial year. See, I understand 4 years you have filed, 1 year you have 4 years you have not filed, 1 year filed. You don't come in this bracket. Consecutive 5 years, any of these 2 documents you have not filed, they can order for winding up. If the tribunal is of the opinion that is just an equitable, that is etc. Any other ground where tribunal feels okay, now we are going to pass the winding up order, done. For example, if partners have been guilty of fraud in some matters, and that has come in the public news, so that is considered to be just an equitable ground that we say, okay, LLP, please be bound. Okay, so there are multiple things. Partners decided you have gone below statutory minimum, you're unable to pay the debts, you're acting against the public policy, you have not filed the important statements to be filed with ROC for consecutive period of 5 years, or tribunals of the opinion, it is required in the situation, just an equitable that you require to be bound. Clear? All right. Then comes to miscellaneous part, which is quite simple. Okay, but we'll take it in the next session. Okay, now we are left with only compromise and arrangement, miscellaneous, and the differences which are there. Differences, my help is not required, but still we are doing it together. So we'll continue that also. All right.